This is the chart causing all the trouble. It looks like an altcoin that has been listed on Binance. I wish it was an altcoin that's been listed on Binance, but it's not. This is the chart we're going to be speaking about. That chart is making that chart look like that and keeping the Bitcoin price under $20,000. Also today, we're going to be giving away 5 Solana phones, and we're going to give you a massive Celsius update. So if you're a Celsius holder or a Celsius depositor, you want to hear what we have to say. We're going to do that segment in the end. So it's now the 5th of July. It's no longer a vacation day. So let's get the fuck out of bed, bitches, and let's do this.
Get the fuck out of bed, bitch, go. Get up, and they got go. Time to wake up, bitch, get up. Get up, get up.
Yo, who joined Sheldon's previous show? Who made money with Sheldon in the previous show? I'll tell you what happened here. So while Sheldon was trading live, Fred was going on his own tangent. He went on his own tangent. I walked into Fred's office. The guy had made a packet. In fact, hold on a second. Let me quickly get Freddie on here. Fred?
Yeah, buddy.
Just tell us what you did there today. Tell us what you did today and how you made a packet of money.
Simple. I opened a cheeky short this morning, and I'll be honest, I'm not a trader. I think I got lucky, but yeah, I banked it. I got very lucky and I banked it, and it feels good.
Do you think you got lucky in the bull market when you used to make money in the bull market?
Oof. I mean, listen, whichever direction it goes, it pays to have conviction if it ends up going in the right direction. So
you got it. You see, you hit the nail on the head. That's exactly what James, are you finished with that chocolate? Are you finished eating that chocolate? You know how frustrating it is when you're trying to do a stream and you hear James's chocolate? Either eat it or don't eat it. Anyway, what I was going to say is that what people don't understand about a bear market is it's exactly like a bull market, but it's the other way around. So remember how quickly things went up in the bull market? Remember how easy it was to make money going long in the bull market? You could pretty much buy anything, you'd make money. Well, the trick to making it in the bear market is doing exactly the same, but the other way around, because that's kind of like where we're at. So that's what most people don't get. But I guess our man Freddie's starting to get it. He had one of his biggest trading days ever, actually. Crazy. Anyway, welcome back, guys. For those who are new, subscribe to our channel. I'm going to show you something amazing about being part of the Banter family. I need your help later. Today, we're giving away 5 Solana phones. We've got a massive Celsius update for you. We're going to talk about Peter Schiff. We're going to talk about some of the charts that are moving Bitcoin. What else is there? Hold on. Let's see. What else is there? Oh, we're going to talk about Chingari and what happened yesterday. We're going to talk about an FTX leaked pitch deck. We're going to talk about Nexo buying up all the lenders, or are they actually buying up all the lenders? So we've got like a not long show, a short show, but a good show. I'm going to try and keep it short and sweet. So because I'm trying to keep it short and sweet, let's get straight into it. All right, let's start off with the Bitcoin charts. Here we are. So here's what happened. We have been moving sideways on this channel for the last couple of days. You can see we've been going to the highs of 21. Call it 22, and then the lows, well, I guess take out the wicks and you probably got these lows of 18,800, and we keep hovering in that range. So every time we get above 20, which is where we were last night. In fact, let me take you to an hourly chart, just makes it a lot more fun. So we were on 20,444, and then bang, we got this big drop in the Bitcoin price. What caused the drop in the Bitcoin price? What was it? Why? We were doing so well. We were on this upward trend. We had all the bulls starting to celebrate. once again thinking that this is the one, this is the chart, the breakout that's going to take us to the moon, and then bang, came all the way down. So what is it that actually caused that move down? It was this. Now, this is not a shitcoin. This is the US dollar index. This is when you compare the strength of the US dollar to all the other currencies or to a basket of other assets around the world. And what you can see is that this has gone up by about 1.5% in the last couple of hours. So 1, 2, 3, 4, 5, 6 hours. This is I'm on the hourly chart. Yeah, this has gone up by about 1.5%. Now, you may say that 1.5% is not big, but let's zoom out a bit and let's just see where we are relative, or where the dollar is relative to where it's been. So the first thing that you'll notice is that critical support above 2017 levels, was finally breached, and it was breached pretty quickly. So that was the 2017 support. It was about 103.60, call it, and that was finally breached, and it was breached to the upside. And as if that's not bad enough, if you zoom out and you say, right, well, when was the last time that the dollar was actually this strong? You're talking about 20 years ago. So the last time that the dollar was at 106, the dollar index was at 106, was on the 11th of November 2002. That's 19 and a half years ago. And what this is showing is that the world is scared. Investors are scared. They're so scared that even though there's high inflation in the US and the US markets are coming down, they would rather be in the US dollars. They're running to safety, and they're kind of saying, look, even though we're wearing a bad shirt, our shirt is better than everybody else's shirt. Even though we've got a bad economy and we've got high inflation, we've got better inflation than Europe, we've got better inflation than everybody else. Our economy is better than everybody else's economy. And you can see that. So we've got the dollar, strongest that it's been in 20 years. Now you look at the euro versus the dollar, and you can see that the euro versus the dollar is almost at parity. So the dollar is so strong that the euro and the dollar are almost at parity, 102.58. Again, that is a level that we haven't seen. I'll take you to the weekly chart. That's a level that we haven't seen since 2002. So in 20 years, the dollar has never been this strong. People have never been this fearful of what's about to happen. And what we do know is that Jerome Powell has one thing on his mind. He said it in as many words. He said the only thing that he cares about is inflation. He's going to carry on doing whatever he needs to do until inflation goes away. The only problem is that all he can control is he can control the demand side. He can control what the US public are starting to buy. What he can't control is the supply side. He can't control the broken supply chains. He can't control the rising gas prices. He can't control the rising oil prices. And unfortunately, what people are seeing now is they're looking at this and they're going, we don't see an end in sight. We don't see the end of this in sight. We don't know how this ends. Jerome Powell said that he's not going to budge. He's going to keep increasing rates until he gets inflation under control. We can't see inflation going under control. We can't see it happening this year, and we can't see it happening this year and next year. And that is what's making investors absolutely petrified. So that's where investors are. They're pretty much absolutely petrified, and that's why they're running into dollars, and that's why you got the dollar index going to 106. That's taking down Bitcoin. Let's look at the US 500, which US Tech 100, which is the Nasdaq, down 1.6%. So pretty much that's scaring markets. I suppose there is one, I call it a ray of light in all of this, and that is that if you look at commodity prices, they're starting to come down. So remember I said to you, let's wait for this trend to break. You can see the trend broke pretty well. We had a little bit of a retest, and now commodity prices are starting to come down ever so slightly. In fact, if you look at it from their peak, if you take a basket of commodities, you are looking at, they are now down 20%. And the same thing goes for oil. So if you look at the oil price, if you take oil from its peak, and remember, oil is important because oil pretty much determines inflation. If the oil price is up, then everything becomes more expensive. Oil is also 20% below its peak. So that's where we are. People are absolutely petrified, and that is why they're rushing into the US dollar. The dollar's getting stronger, Bitcoin's coming down, and all tech stocks, and in fact, all markets are coming down, but the tech stocks are the ones that are obviously the hardest hit. So that's where we are. And now you know why we are here. And remember that Jerome Powell said that they're going to start in June, they were going to start quantitative tightening, which means they were going to start taking money out of the economy. And if I remember correctly, he said that what they were going to do is they were going to take $45 billion out of the economy for 3 months. So starting in June, it was going to be $45 billion in 3 months. And then July, I think it was also $45 billion. And August was $45 billion. And then they were going to double it to $90 billion. So let's look at how the Fed actually did in June. Well, if you look at their scorecard, that's the scorecard. And effectively what you'll see is that they reduced the balance sheet by $7.5 billion, which is not like $45 billion. It's $7.5 billion. So that's all they managed to do, was to reduce the balance sheet by $7.5 billion. Now remember, they've got to reduce this balance sheet by $5 trillion if they want to get to pre-COVID levels. The markets, if you take the bonds and equities together, are already below pre-COVID levels, and they've only taken out $7.5 billion out of $5 trillion out of the economy. And so I think I agree with the sentiment in this tweet, which says they literally put us into a recession before they started rolling off their balance sheet. That is literally what happened. And so, yeah, I mean, some people are saying, look, they'll never manage to do quantitative tightening. Other people are saying they're going to carry on until they eventually get it done. Alrighty, so that's the big world. That's the macro world. Let's quickly look at crypto and how crypto is doing. We saw the Bitcoin price. I think that this chart over here is probably the most misunderstood chart of the last couple of days. Everybody's looking at this chart and going, wow, look at the rate at which people are taking Bitcoin off exchanges. What they're not seeing here is, why are the Bitcoin coming off exchanges? This is not Bitcoin coming off exchanges because people are putting them into long-term storage because the hodlers are buying Bitcoin. This is Bitcoin coming off exchanges because people are panicking about what is going to be next in this cascade of liquidations that's happening. Is it going to be an exchange that goes down or whatever else? And remember, I did a show yesterday where I showed you guys which exchanges I think are safe. And I said to you, in this bear market, you need to treat exchanges like a strip club. You need to walk in, do your business, pay your fees, and get the hell out. What you don't need to do is stick around. Don't stick around in the exchange. If you leave your money in the exchange, you're going to have a problem. Just remember, every time that you're trading on an exchange, pretend you're at a strip club. Go in there, do your business, pay your fees, get the hell out. Get the hell out. Don't go to the strip club with the lowest fees, because that's where you may get a disease. That's where you may lose your money. You go to the best exchanges. Go to the high-class places. Go to the best exchanges. Go to the FTXs, the ByBits, the Binances, the Coinbases, etc. Don't be playing on small exchanges. This is not a time to be playing on small exchanges, because if you do, you risk them potentially going out of business, and if they do, then your coins are gone. I did pull out the stat, this chart, which shows the volume for spot markets across the years. And even though we are in a bear market now, what you can see is that even when you look at this bear market, we are still about, if you look at the bear market of 2018, 2019, look at the volume on exchanges versus the volume on exchanges now. So it just shows you that even though we are in a bear market, net, when you look up, you'll see that the charts are actually moving very much up, and the crypto adoption is actually very much moving up. Alrighty. So that's that. Let's get into the big story of the day, which is probably why you guys all tuned in. And that is the Celsius story. So let's quickly talk about what's happening, what the latest is at Celsius. And then I've got a guest for you guys. We're going to break down the Celsius story. But there was some good news on the Celsius front. And the good news is that they made another payment towards their loan, their collateralized loan. And what you can see now is that their collateralized loan has a liquidation price of $4,967. So when Bitcoin goes to 4,967, their loan will be liquidated. And so I think for now, let's just say for now, I don't know if it's long term, but I can say to you for now, we are pretty safe. I don't think that Celsius is going to be liquidated, or this specific loan on Celsius is going to be liquidated. They also made an announcement last night that they are firing or laying off 150 employees as it battles a financial crisis. So it does feel like they're doing things. And the question is, who is actually doing things? Is this a lawyer? Is this a liquidator? Is this Alex Mashinsky? Where are they getting the money to pay all these, to draw down all these debts? Those are all the questions that everybody's asking. So I thought what I'd do is I would bring my friend Simon Dickson on the show. Simon, welcome, buddy.
Okay, well, good to be back.
Amazing, brother. So, Sam, I know that you've been in the press a lot speaking about Celsius. I know that you're one of the first investors, one of the early investors in Celsius. You're also one of their biggest depositors, or I don't know, one of the biggest, but certainly a sizable depositor in Celsius, right?
Yeah, so I'm one of their top depositors, and we hosted their Series A funding round. So at the valuation of the last funding round, our equity position was worth $170 million, which represented at the time about 7.5% of the company. So we were an equity investor, and I'm a depositor.
Okay, amazing. So have you had any contact with the company since they paused withdrawals?
Unfortunately, when they paused withdrawals, I was on a timeout from my father's passing. And suddenly, while I was trying to deal with all that, I started getting DMs like crazy from shareholders and all sorts of people. So I had to take away from my timeout and contacted Alex. I knew that they had already engaged an investment bank, and I was deeply fearful because I'd been through a few of these cycles before. This is the third cycle. If you're not familiar with the history, Kraken was the one that won from the Mt.Gox cycle. Then Binance was the winner of the second cycle after, and this one, FTX, is the winner of the third cycle, where it's been cascading from companies that are going through catastrophic scenarios. I immediately contacted, and I knew that this was going to go nowhere. But I contacted the TradFi advisors. I contacted Alex. He said, "You've got to speak to my advisors now." And I gave them a strategy that we executed for Bitfinex in 2016 that recovered the exchange and led to the creation of Binance through Tether.
Before we talk about the proposal, because I do want to talk about the proposal, but I just want to try and understand, there have been a lot of rumors in the market about how big the Celsius hole is. What's the gap? What gap are we trying to bridge here? There was an article, which was this article over here, which was from the block, which spoke about FTX that walked away. And they here mentioned that the gap is about a $2 billion hole. Do you have any insight as to how big this problem is? So I think before you want to come up with a solution, you kind of want to try and understand how big is the problem.
Yeah, so there's people that live in different camps. Some people think this is a liquidity issue. If it is a liquidity issue, I believe they would be communicating and telling people how long it will take them to get through this liquidity issue, which makes me believe that there's an insolvency issue. And that insolvency issue, we can only but guess, because there are collateralized loan, I believe there's uncollateralized loan, there's on-chain data, and I believe there's off-chain data. And so I tend to believe, and I'm preparing for the worst case scenario. And so put together a syndicate in the billions rather than just the millions.
Before we get there, and we are going to talk about it because that's really what I want to spend more time on. I want to try and get a lay of the land. How do you think Celsius got into this mess? So, and the reason why I ask is, you're talking about a business that had a very big book of clients. You're talking about a business model that at the time seemed pretty sound, like, you're lending and you're borrowing, and hopefully you're lending at a higher rate, etc. How do you think that they managed to get themselves into a hole where there's a $2 billion deficit?
So change in business model is my belief. So when we invested into a peer-to-peer collateralized model, which I think was the right model. Over time, because the company grew so fast and the depositors grew so fast, it's switched to a search for yield, just like in the bond markets and fund managers and pensions looking for yield. And so therefore it's switched from a peer-to-peer lending market to what I would consider a security, where the team were making decisions about how to make investments and try and find yield faster. A few hacks, a few problems, and then suddenly it went into a fractional reserve bank, is my belief, in which case it now needs a banking license because it owes more obligations. And then over time, I believe that just chasing the yield and the growth of the market, going from a company of 40 people to 800 people in a year, that is an incredibly challenging thing. I think mistakes get made when you grow that fast. And I do believe that, the regulatory model was trying to catch up with the growth of the company, and all sorts of problems evolved over that year that leads us to where we are now.
All right, fast forward, we are where we are now. Let's quickly just understand, where are we now? We're looking at a company that's potentially insolvent. They've halted withdrawals. No one's heard from the company since. So I haven't yet heard from anyone who's heard from the company since. I've reached out to Alex. I believe you've reached out to Alex. But nothing else has come from the company. How long do you think they can continue to operate without saying anything? Like, at some point, you've got to draw a line in the sand and say, look, this is where we're at.
Yeah. So the challenge right now is you have TradFi, you have the existing board. I believe that there's a power play. And I believe that everybody has their own lawyers. So each individual is trying to protect their own position. The company is trying to protect their own position. The advisors are trying to protect their own position. And therefore, that leads to, I believe personally, and I'm happy to be wrong because I would like my deposits back, and I'd like some value in the shares, a position where I don't believe we're going to hear from Alex other than a carefully worded statement by some lawyers.
Wow. Okay. So what is your proposal? And then maybe let's talk about what the likelihood of actually implementing such a proposal, given the fact that they have got TradFi advisors, they have procured lawyers and potential liquidators. So, we're at the point now where the traditional financial system has their grubby paws all over Celsius, right?
Yeah. So I'm used to dealing with these scenarios. There are solutions. We have made very successful recovery plans using financial innovation rather than TradFi. We saw that Mt.Gox took 8 years. With Bitfinex, it took 9 months. And with the second time with Tether, it took 2 weeks to recover from that experience. I wanted that to be implemented. So I shared that with the TradFi advisors. The TradFi advisors didn't act fast enough, were too conservative. And so I believe that original option to save Celsius and do a communication strategy went because the advisors weren't acting decisively enough like Bitfinex was in previous disaster recoveries. So then it moved to the second one, which I said, we'll implement it for you. At Bank to the Future, we have the securities licenses in order to implement that. We put together a strategy and an approach that would essentially lead to a haircut of depositors, give everybody what is left, their deposits back. And I said, you've got to have depositors first, give them something that makes them whole. Then you might have a future for the company. And then from there, you go down the chain further. So we gave them a strategy. I was invited to become a board member at Celsius, but I thought that would not help. I'd be much better doing an independent strategy. Plus, for regulatory reasons, there's no way I could take that risk. And that would ruin my position at the Bank to the Future, the regulated company.
So if I understand,
and so then finally, yeah, okay. I'll finish the final things. And so finally, after I realized that wasn't going to be implemented in timely fashion, I found the type of high-risk speculative investors that would be willing to syndicate billions to put together something similar to what an FTX might do, but this time involve the community so that the community gets the benefit rather than just one company coming along. And that would involve a change of board, a change of brand, and making sure that we're prepared for every scenario, because the worst thing that can happen here is we get an announcement of bankruptcy. They then sell all the crypto. That creates the next cascade of liquidations and creates the worst case scenario. Why would they do that? Because TradFi don't believe in the future of this, and you need the right type of advisors for the role. Once the board stops and the TradFi advisors take over, I fear the worst, and I fear that they'll make all the wrong decisions for conservative reasons. And that's what I try to avoid.
I think you're 100% right. I think if TradFi come in and decide to liquidate it, we're going to get a lull for a certain period of time. There's going to be a liquidation order. And when the liquidation order comes, we know that the liquidator is not going to act in the best interest of crypto. And they're going to effectively liquidate whatever's left, 10 billion, 15 billion worth of assets, right?
Yeah, that's the scenario to avoid. And then some TradFi will take up all of the decent assets and give breadcrumbs to the community. That's what I think we wanted to fight for. So we created a campaign, #depositors first, laid out the proposals, and we're trying to get the community support to exercise influence, because they do have a fiduciary duty to take the best solutions. And therefore, we've doing everything we could do to make sure that the best solutions are out there, and the community get to have their say, because we've done it before. We can do it again. And it's for the good of Bitcoin, for the good of crypto, and for a future for what I thought was a great model of peer-to-peer collateralized that suddenly turned into a wrong model. And you've got to solve the regulatory issues, because I don't think yield will exist as it has in the past. This is all going to be securities after this. This is all going to be regulated, and therefore you need a team that can operate under that model. And run this as a regulated securities business, or even a bank.
So just run me through the overview of the proposal. We estimate that there's 2 billion. Let's estimate that there's a hole of 2 billion at the moment. So is your overview to go and raise the 2 billion, or to give depositors a haircut and say, look, depositors, you're going to get back 80 cents in the dollar right now, and then you're going to get back tokens to the value of the balance?
Yeah, so what we did with Bitfinex is we immediately assessed the situation, which is what I think is happening right now. The situation is assessed. Then you know the size of the hole. You then allow people to withdraw and gain access to their funds with what is available. And then you represent the debt with a security token that can then either be held if you believe there's a future for the company, or it can be converted into equity, much like a bail-in, and they can participate in the upside. Or you could even put together a different financial product like a token where you could dump it if you didn't believe it maintained its value. And all of these requires effective communication and coming out and acting decisively and making sure the regulations are all compliant with this.
Sam, can I ask you a massive favor? Your screen's frozen. If you could just log off and log on again, we'll wait for you, just because I can see that we can see you, we can hear you, but we can't see you. While Sam is doing that, you just need to log on again. We're using the same link. While Sam is doing that, I want to remind you guys that today I'm giving away a Solana phone. Yeah, if you want a Solana phone, I think I'll only give it away if we get like 3,000 likes. So let's get to 3,000 likes. Today I'm going to give away a Solana phone. Imagine you'll be one of the first people in the world to actually get a Solana phone if you are one of the winners of the Solana phone. Since the Solana phones are being given to us by ByBit, I think it's only fair that you have to open a ByBit account. You have to have money in your ByBit account. And you have to, at some point in your life, trade a Solana trading pair on ByBit. And what we're going to do is we're going to give away one phone today, and we're going to carry on giving away Solana phones to people who do that. So I see we got Sam back. Remember, guys, 3,000 likes. That's what we're going for, 3,000 likes. All righty, Sam, now we got you back. Now we can see you. Okay. If you open deposits again and you say to depositors, look, you've got 80 cents on the dollar back, and you've got 20 cents represented in the form of some kind of equity or whatever the token is, don't you think there's just going to be a run and everybody's just going to withdraw their money on the first day and say, you know what, once bidden, I just want 80% of my money. I'm going to take 20% loss, and I want to get the hell out of here.
Yeah, exactly. And that's why there still has to be a future for the company. And that's why it has to simultaneously show that how this model can survive in compliance with the regulatory requirements, given where the model is, and a team that people have faith in at the same time. So if it's going for that recovery or unwind, either way, if we go in for an unwind, then people are going to have that haircut. And so therefore, we've got to start looking at what is the future of what can be done with this, and how can those that were haircut get a potential of the upside in what comes next.
What is the incentive for the TradFi liquidators or advisors to accept a proposal like this? If they do accept a proposal like this, one, they won't be executing their service, so they won't be getting any fees. Two, they won't be picking up any cheap assets. Three, they won't be able to raise money for some outside consortium that wants to buy assets inside Celsius. I'm just struggling to see why any TradFi advisor would do this. I mean, surely they're going to say, look, we don't want this token thing. We've let you guys play your crypto games, and look what happened when you guys played with tokens.
Yeah, so we can take the token out of the equation, and we've got a model that works just with traditional securities. We've been doing that for years. And so we've got 3 different proposals, because we know that if it moves into Chapter 11, which hopefully it will based upon US. The reason Mt.Gox worked in Japan is because they didn't sell the Bitcoin. That was the important part that made that recovery work. In US, they may take a different conservative approach depending on how it is, but this is where the community counts, because they have a fiduciary duty in order to consider the best proposal that can be executed in the most timely fashion, which is why I was frantically making sure that we had everything in place rather than sitting there like ducks waiting for the announcement to come. So it's very important to get the community to support, which is why we launched that webpage, bnktothefuture.com/Celsius. And make sure that we've got the backers in place so that we can actually underwrite some of this offering as well, so that we can prove that this is a better offering than just simply selling, unwinding, and doing that. Then they have to pick the best offering, and we can apply influence in that process. Just like in Mt.Gox, all of the creditors got together and applied massive influence to ensure that they didn't sell the Bitcoin. And we need to do the same again.
Today, Mt.Gox is probably one of the richest liquidations of all time, right? I mean, their assets are so much more. I think, what was the number when Mt.Gox was hacked? Wasn't it like 40 million or 70 million? What was the amount?
Well, I mean, Mt.Gox was bought from the founder of Ripple with 80,000 Bitcoins missing. So it was a Ponzi scheme from the beginning, accidentally, when Mark Capellas bought it. But I believe it was 850,000 Bitcoin. Can't even remember. These numbers seem so small in dollar terms compared to the numbers we're talking about now. But it was catastrophic at the time. I can't remember what it was.
I remember that the Bitfinex hack was also catastrophic at the time. And I think when you look back now at the Bitfinex hack, it's tiny. Right now, in today's numbers, it's tiny.
But it was 119,000 Bitcoin worth 72 million, and 55 million was converted into equity.
That's crazy. All right, Sam, if our community, our Celsius holders, if they want to get involved, what do you need them to do? What's the call to action?
Follow me on Twitter. I'm doing lots and lots of AMAs. I'm doing a roadshow. And go to bnktothefuture.com/Celsius and vote for the proposal and give us your feedback on what you want.
Amazing. Sam, thank you very much, my friend. And once again, my condolences. I know you lost your dad pretty recently.
Appreciate it. Crypto calls.
Thanks, buddy. Man, we're lucky to have people like Simon in the space. I've known Simon for years, and he's always been a gentleman, and he's always worked really, really hard and done amazing things. And I think we're lucky to have him. I mean, we're lucky to have him as a fellow Celsius investor and depositor, because that's the kind of person that you want spearheading our efforts to try and maybe get our money back. I have reached out to Alex. As far as I know, he hasn't got back to me, but let me not lie to you. Let me check my phone. He hasn't got back to me yet. So I guess he's probably not allowed to get back to me. Okay, let's look at what else is happening. I know that we said we would speak about Chingari. This was brutal. I don't know if you guys watched this, but yesterday, what happened with Chingari was you had a token that was trading at, I think, 80 cents or something along those lines. And someone went and dumped 3 million tokens on KuCoin and took the price down to 1 cent or 2 cents. And so now you've got a token that was trading at 70 or 80 cents the day before, and it's now trading at 16 or 17 cents. I logged on earlier. In fact, let me just see if I can. I did log on to an AMA with the team earlier, and they said that everything's under control, that it was just market forces. It was just one big whale who sold. Now, I'm not sure I believe it, because if there is a whale, you pretty much know which whale this is and what the whale's address is if they're dumping 3 million. And 3 million Chingari, even an IDO price would have been one of their biggest investors. It would have been a $1.2 million investors, given the fact that it was a 40-cent ICO. And so I want the team to actually come out and tell us what the hell's going on. I did check the Sol scan, and I did see that the team's tokens are still there and the treasury is still there. So it definitely wasn't a hack. If we checked that, it looks like it's a disgruntled seller. The issue that I have is that if it is a disgruntled seller and you do want to sell, why do you knock the price down to zero when you could just sell slowly? Because if you sell your own tokens at a big amount quickly, you're just losing money. So look, I did take a position here. The reason why I personally took a position here, I took it up on my KuCoin account, on my FTX account. The reason why I took it on my, why I took this position on FTX is because the price on KuCoin was destroyed yesterday, and it was jumping around on an FTX. It wasn't, so I managed to get some on FTX. The reason why I bought it is because I didn't take a big position. I took a very small position, and the reason is I like the concept. I like the product. I've used the app. The app is pretty cool. It's like the TikTok of India, but. And I don't think that it's logical that it goes down to 25% of its value overnight if nothing is wrong and these people aren't telling us that something is wrong. So that's why I took a bit of a position there. I'm not telling you to do the same. I'm just letting you guys know what I did and why I did it. They, as I said, they came out with an announcement and they said, hey, look, there's no hack. Everything's fine. Everything is safe. We're checking. We're with exchanges. I was following this all night, and that's what they said. Tomorrow we're going to talk about this FTX pitch deck. I want to spend some time on the FTX pitch deck. I do think we need to talk a little bit about what's going on with Peter Schiff, because I don't know if you saw, but he owns a bank in Puerto Rico, and they closed his bank because it didn't meet the minimum deposit criteria. So the minimum cash deposit criteria, his bank account is closed, and it does feel like, this is a guy who's after Bitcoin, but the truth is, like, Bitcoin fixes this. This is exactly why we have Bitcoin, so we can get rid of the banks. And he does have, he said the IRS leaked the fact that they have pressed charges against him, or they've investigated him, and he's protesting his innocence, and he's saying, look, you're making me guilty before I'm guilty. Something to pay attention to was this man over here is a guy called Irwin Schiff. Now, Irwin Schiff is Peter Schiff's father. Peter Schiff's father actually died in prison. And he was in prison because he decided at some point in his life, in 1974, he decided to stop paying his federal income tax. And not only did he decide to stop paying his federal income tax, he decided to encourage others not to pay their federal income tax. And he landed up in jail. And he actually spent the rest of his life in jail until eventually, I think he died. I think it was lung cancer. I think he got lung cancer. So that's the story of Peter Schiff. Lastly today, I need your help, and I want to show you guys I'm very, 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 very proud of this. So we launched our crypto school, as you know, about a month and a half ago. Our crypto school is really the coolest thing in the world. We decided to make our crypto school a live crypto school where we're going to put 1 million people through crypto school, and we're going to do it for free. Not only that, we're actually going to pay them to learn about crypto. So this weekend, the first 100 test students finished their course. They all got their deposit bonuses and their money for learning crypto. I think it was about up to $5,000 or $6,000 to learn about crypto. So our course is designed for newbies. It's for people who don't have exchange accounts and don't have never bought crypto before. And I want to just show you how cool this is. Just check it out and let me know what you think. Welcome to Crypto School. I'm Cryptoman Ran, and I'm so excited to have you here. It's been a long time in the making, but we finally built the ultimate crypto school.
This thing with crypto, it's really changed my life. A whole new world of opportunities.
Everyone thinks that crypto is so technical, complicated, and intimidating. But in this course, we'll show you just how fun and simple learning about crypto can be. Whether you're a complete newbie or you've already begun your crypto journey, Crypto School has 5 promises for you. Firstly, Crypto School will be fun, simple, and structured. By the end of the first course, you'll be able to build your first crypto portfolio. And you'll be able to make money in a market that goes up or down. You'll make new friends and build a crypto network for life. And not only is Crypto School always going to be free, but you'll be rewarded along the way. You'll literally be paid to learn, or as we call it, learn to earn. When you sign up with any of our partners, you'll be rewarded with hundreds of dollars worth of sign-up bonuses designed to launch you on your crypto journey.
This is not regular school. It's gonna be wild, believe me.
Nothing's going to stop you on your way to becoming a crypto pro.
Our vision with the Crypto School community is to become the most supportive, loyal, and knowledgeable crypto community in the world.
There's a good chance that crypto is the future currency of Earth. I mean, I think it should be the will of the people, you know?
Bitcoiners around the world, the time has come. We are ready.
We're really living through a reformation right now, and you're watching history being made right in front of your eyes. One day people will look back at this 30 years from now and say, this is when the entire inversion of the monetary order took place.
Satoshi created the ultimate decentralized network of money. And as a result, Bitcoin is now completely unstoppable. What started out as a post on a website all those years ago is now a $3 trillion industry with over 250 million users worldwide. You're early. You're part of the first 2% of the world's population to learn about and adopt cryptocurrency. Money is a shared resource. It's run by the people, for the people, with no middlemen and no government intervention or manipulation. All you need to participate is a smartphone and an internet connection. There's no more financial exclusion based on where you live or how much money you have or don't have. We're in a new world. Welcome to the future of money. Welcome to the world of Bitcoin and blockchain. All right, so that's our crypto school. It's very different from anything that you've seen because it's actually a cohort-based class. You learn with other people, you build a network, you're guided through every single step of the way. What I want you guys to do is if you know anybody that's new to crypto, and this is only for people who don't have an exchange account, never learned anything about, or don't know anything about crypto, there is a link. James, where is my link for crypto school? James?
Put it up there, but it doesn't seem to save.
Okay, let's put it back now so we can just see it. I want to show you guys where the link is. Okay, I'm going to put it back there. James, let me know when it's there.
Okay.
Yeah, let us know when we can go, James.
No pressure.
There would be no pressure if you just put it up when I told you. Alrighty, so let me find you. Okay, so let's go and you guys can see where it is. So here there is a referral link here. You can join our crypto school for free. Here it is. You can just click this button over here. You go to the landing page for school and you fill an application form. And then we're doing it. We're putting 1 million people through crypto school for free. And I mean, I want to just show you how cool this is. I don't know if this one works or because I've already done it, but I mean, it's literally drag and drop videos, videos every single week. As you finish one, it unlocks the other. Here we go. So you can see this is just more or less how the experience works. Welcome to Crypto School. I'm Cryptoman Ran, and I'm so excited to have you here. It's been a long time in the making. So once you've done the course, you have a quick questionnaire, etc. And yeah, it's amazing. So and you can see you can hop from lesson to lesson, and you do this with your classmates. You do it in teams. You earn points, and you earn crypto along the way as you do this. So if you know anybody that wants to join our crypto school, newbies to Twitter, to crypto, not people that already know about crypto, not you guys. This is for your friends and your family. There we go. School.cryptobanter.com. Simple as that. Help me help 1 million people. Help us help 1 million people get into crypto absolutely free. And in fact, they're going to be paid to learn. That is it for today, guys. I will see you guys again tomorrow. Until then, have fun. Trade well, my friends.